The most significant wealth-building opportunities of a generation often begin in total silence, unnoticed by the public until the window has already closed. In 1999, the early internet was dismissed as a niche hobby. In 2009, Bitcoin was ignored as a fringe experiment. In both cases, the massive shifts in wealth were well underway before the average person realized they were happening. Biological wiring plays a role here. Humans are built to prioritize immediate safety, which often means waiting for a trend to become obvious and safe before participating. By the time an opportunity feels certain to the majority, the early adopters have already captured the most life-changing financial gains. Today, the global news cycle is dominated by the immediate pressure of rising oil prices and their impact on daily life. High oil costs act as a tax on the entire economy, doubling the expense of production and transportation. These costs eventually arrive at the store, driving inflation higher. This creates a scenario known as stagflation. The Federal Reserve finds itself unable to lower interest rates to stimulate growth, because doing so would risk further price increases, leaving the job market vulnerable. Many investors flee to cash during these periods, seeking a sense of security. However, over a 25-year period, the mathematical reality of inflation can erode up to 80% of that cash's purchasing power. Economic chaos functions as a filter. It removes businesses with weak foundations, while masking the underlying movements of a generational wealth transfer. Market panics historically serve to separate viable businesses from speculation. During the dot-com crash, the vast majority of tech stocks vanished. A small group of companies survived that wipeout because they possessed strong business models. Those who identified and held these survivors eventually saw their portfolios grow exponentially. In the current AI-driven cycle, the most durable value is being built within the unsexy sectors of infrastructure and hardware. AI computation requires a massive, constant supply of electricity. The scale of this demand exceeds what standard oil-dependent power grids were designed to provide. To bypass this bottleneck, large-scale capital is moving into nuclear energy, advanced cooling technology, and on-site power generation that functions independently of the grid. Reliable, independent energy serves as the physical requirement for the AI supercycle, making these investments resilient to short-term macroeconomic news. Beyond energy, there is a physical limit on memory. As AI models grow in complexity, they require exponentially more high-bandwidth memory to process data. Currently, 3 companies control 90% of the global memory market. Because increasing production capacity takes years of construction, these entities hold a massive competitive advantage. This concentration of power extends to the physical manufacturing of semiconductors. Specific lithography and hardware manufacturers act as irreplaceable choke points. They possess the only machines capable of printing the high-performance chips the world requires. The software layer provides its own monopolies. Specialized data platforms are now used by governments and corporations to maintain visibility and make decisions during periods of global uncertainty. This chart clarifies the difference between stock price and business value. While the market price may drop, the consistent expansion of gross and operating margins indicates a company that is actually becoming more dominant. Generational wealth is built by identifying these hidden monopolies, the companies that the rest of the technological world is physically required to use. Over the last century, the global economy has faced world wars, pandemics, and deep depressions. These events are a permanent feature of the financial landscape. This chart reveals a repeating historical blueprint. Despite various crises, the market moves through a cycle of red bear market contractions and blue bull market expansions. The mathematical reality is bull markets last longer and produce significantly more growth than the periodic crashes preceding them. These periodic market collapses provide specific entry points necessary to accumulate generational wealth at a discount. Success in these periods requires a contrarian approach. Since timing the exact bottom of a crash is impossible, investors must be prepared to buy when general sentiment is at its lowest. A defensive strategy involves anchoring a portfolio with the S&P 500, avoiding the dangerous use of margin debt, and resisting the urge to make impulsive trades. The offensive component relies on dollar cost averaging. This allows for methodical acquisition of shares in essential monopolies, while the broader market remains weak. History moves forward without waiting for permission. The current window of opportunity is open, but it will eventually close, leaving only those who prepared in a position to benefit. Do you believe the next major shift in wealth will be driven by AI, crypto, or an industry that hasn't reached the mainstream yet? Please share your thoughts in the comments.